They've seen big gains this year, and especially since late October, led by the likes of Pulte and Toll Brothers. But our next guest downgraded a bunch of the builders to neutral from outperform last week, saying the good news may be already priced in. Jay McCanless is a housing analyst at Wedbush. Jay, it's good to have you, and we've been speaking with a lot of bullish colleagues of yours lately, so you're going a bit against the grain here.
Yeah, a little bit. I think the move that we've seen that you talked about since the beginning of November, along with what may be in terms of the lack of supply, like Diana was talking about. I don't know that we'll necessarily have enough homes to be ready for all this demand that's coming, especially if rates move down. And so I felt like with the run the stocks had had, it was a good time to step to the side for a little bit.
So that's interesting. It's almost a problem to you. It's a good problem to have. It's not enough supply.
Yeah, potentially. I think that's one of the reasons when you look at the names that we like, we're focused on not only affordability from a manufactured housing standpoint, as well as we do believe there is going to be higher volumes in 24. As we said in our downgrade note, our long-term bullish thesis has not changed on the group. And we do think there's going to be growth in single-family starts next year. And potentially remodeling is down a little bit, but we do think you're going to see more starts coming out of the ground in 24 versus 23.
So long-term, you're still bullish. You think if there were more supply, maybe the builders could do better. Let's talk about valuation, which sounds like it's one of the top concerns here. What are the valuations you're looking at? Do you look at book value, and where are we by historical standards?
So if you look at where we are right now in book, we're about 1.4 times our fiscal 24 average book valuation. That is about the same level we saw in late 21 when the group peaked before, but certainly nowhere near what we saw during the GFC, where we were trading it over 2.5 times forward book. So in my mind, it isn't so much about valuation at this point as it is the group's had a great run. I think there is a very strong leaning when we talk to clients that rates are going to come down pretty quickly in 24. If something knocks that off track, that may slow down demand. That's something I'm a little worried about. But also, you look at what prices have done, and we've seen the price growth on a year-over-year basis in the FHFA. That started to accelerate again. I think October's reading was like 7% over last year. So we're seeing prices accelerate again. Mortgage rates have come down, which certainly helps. And the builders, to their credit, have found ways, whether it's mortgage rate buy downs, incentives, a little bit of base price cuts to keep that affordability working. The question is if something off rails or derails this lower rate story, then I think the group might see a little bit of a pullback.
I guess the question is not so much are builders in a good place, because it seems to me they are, because existing home owners are not putting their places on the market. Existing home sales are down. So where does the inventory come from? It comes from new building. But on the other hand, I guess the question is, have we already discounted, with the big rises in an awful lot of these builders, a lot of what could come in 2024? In other words, have we front-loaded some of the stock market gains that these builders might otherwise experience in 2024?
I think for the site builders, the Pultes, et cetera, of the world, I think you may be correct, and that's kind of one of the premises of our downgrade. I would say if you split it into two separate camps and you look at the manufactured housing space, Cavco is a name we like there. They actually saw volume shipments a little bit weaker in 23 versus 22 because of some over inventory situation. Those inventory situations seem to have fixed themselves. So we actually do think they're going to see volume growth in calendar 24. That's the ticker CBCO. That's a name we continue to buy here. But I think for the core stick builders that we cover, I think we've priced in a lot of good news already.
Interesting.